are we then facing a bubble? Do you sense that this flood of money, which is clearly going largely into financial assets, including the stock market, and boosting it up so that we get this bizarre contradiction that so many people write to me about, the collapsing economy on Main Street all around them, the 52 million people filing for unemployment compensation, and a booming stock market that has basically recovered from the crash of March? Is this a bubble? Will it collapse? What is it we're seeing?
It is a bubble and it will collapse. And that we have already seen from the prior crises and sub-crises of this century so far. And the reason for that is because the money that's being created itself is going so quickly into financial assets. And that's not just the stock market. The stock market's kind of the most like apparent disconnect between the real economy, because we know that a lot of people won't get back into their jobs. A lot of people will still be losing their jobs. Foundational economies and small businesses have been ruptured to such an extreme extent that the amount of money that has been flowing into the stock market, even if it were to be recalibrated, doesn't have the time to help the real economy in the current structure, in the current system. So therefore, it continues to bubble up because all the actors, the banks, the hedge funds, the private equity funds, the wealthy, the people that dabble in the stock market even, are collectively pushing up that value. And that's why we see, for example, that the NASDAQ, the representative of the technology stocks, and there is some merit, they do help people do things from home. But on the flip side of that, there's a ton of money going into them and creating new records. And that's why the Dow is up to almost where it was before the pandemic. That is a bubble. It does not represent the real economy. It doesn't even represent where the real economy is going to be in any sort of near future. And on top of that, we have a bubble in debt. Debt was already high. Public debt was already high. Corporate debt was already at record highs before this year began. Now we have a situation where, because of the Fed, and because the private banks want to make their money in fees for creating deals with their corporate customers, so at least somebody can make some money while some of them are closed, they are borrowing more debt. So as a result, in the first half of this year, the larger corporations in this country have already borrowed more because of the Fed's policies, because the Fed has said they will be there to help them if they need it, not just the government, the Fed. They have been able to blow up their debt by as much in these 6 months as the entire year last year, which was already a record. That is also a bubble. Bubbles with nothing beneath them at some point pop. And that's what we'll see. And it might pop because another wave of the coronavirus, the same wave, bigger, something else that we haven't seen yet, or the general sort of deluge of this debt coming out of the bubbles that it has been inserted into. And these are problems because we're not repairing, we're not viewing, we're not looking at long-term strategies for the real economy, particularly in crisis, but even beyond that.